Good Tuesday morning, Market Chameleons. Everyone joining us for the first time. Welcome to the Market Chameleon pre-market show led by myself. And there he is, Dimitri Pargamonic. How you doing, Dima?
Hey, Will, how's it going?
Great. You want to start with the disclaimer? It's up and ready for your comments.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not a broker dealer. If you need professional advice, call your broker or your registered investment advisor. That's what they're there for, to help guide you and give you advice. So there's the disclaimer. And with that, I think we'll get started. And today, again, we'll just open it up for Q&A. If you guys have any questions, it could be regarding the Market Chameleon tools, strategies, analytics, data, things that you've experienced that is working, maybe things that didn't work and you expected something else. You could come on a show, share that with us. A couple ways to ask questions. You can put them in the live chat. Will's monitoring them. He'll read them back to me, or we put out a link there that goes over to Zoom. When you come over to Zoom, you raise your hand. We'll turn you on live. You don't have to turn your video camera on, but you could come and ask your question directly or share your experience. We had a couple people do that yesterday. Michael came on. He talked about how he plays earnings and his strategy. And I think it just benefits the entire community, because it's not just about, tools and data, but it's going to be education and experience that trumps everything. Because the education and experience, that's what's going to make you improve as a trader. And this is an opportunity for the community to kind of, share those experiences, ask questions, and to learn. So while we're waiting for that, anybody, to pop in a question or welcome to come on board. We'll start out with the pre-market report. Maybe I'll move on to a couple other reports we haven't, talked about in a while. And you'll stop me, Will, if you see it, if anybody comes in.
Yeah. I mean, it was a crazy volatile day yesterday, huh?
Yeah. We opened down at one point, how much was the market down? Like 4%, 5%, like a really,
No, it was over 1,000 point in one of the main indexes. I mean, it was incredible, and then rallied back. And I see the SPY is down in the pre-market again. So real volatile.
Yes. But yesterday finished up on a day, right? So
yeah.
I think a lot of these indexes finished up on a day. So a big, buy in the dip, looked pretty bleak. And then all of a sudden a rush of buyers came in and just like rallied all the way up to the close. So we'll see how it is today, but definitely a lot of volatility right now hitting the market. And, we're seeing this in a lot of and I'll take a look at it, but a lot of the, high growth stocks have been getting really hurt. Like a lot of them are down over 50%, I think, on the year. We've seen the digital assets, digital coins, they've gotten smoked. So a lot of these stocks that are, in that space have been getting hurt. So maybe we'll take a look at that as well. But, it's dragging the entire market down, and got interest rates coming up. They're going to start raising interest rates. We talked about some of the geopolitical risks, so a lot of stuff out there weighing in on the markets. So we'll see how it is today. But what are we down? I see 1.6% right now in the SPY.
Yeah, which seems like nothing right now.
Yeah, it doesn't. Yeah. All of a sudden, it's like you start getting used to that volatility. So this is the pre-market report. Stocks right now trading in a pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I see 40 stocks here made our percentage gainers list, 211 on the percentage decliners list. So, from that perspective, looks like we're setting up for a bearish bias at the open. I'm going to take a look at the S&P 500 stocks, see if we see a similar situation. So using the filters above, I see one in ETF. By using these filters, that controls the data in this report. So let's select SPY. That is the S&P 500 ETF. That will filter out the components in the SPY. Let me refresh my screen. I think that my screen's stale. I had it up for a while. Okay. So we'll take a look to see if we see something similar in the SPY. So in ETF, SPY. So we see 3 stocks made the percentage gainers list and 46 on the decliners list. Again, looks like a bearish bias at the open from that perspective. If there are no questions, maybe what I'll do is go to the stock screener, just to see what's going on, in the stocks in general. No questions, Will?
Nope.
Let's take a look at the stock screeners, and this kind of has been, I've seen a couple tweets like looking at certain metrics, how many stocks are down 20% or more. So let's take a look. This is the stock screener. Let's see how many stocks right now are in bear market territory in the S&P 500. So these will be stocks that are down 20% or more from their 52-week high. All right. So the first thing I'll do is I'm going to go here in ETF and let's pick SPY. So right now I'm going to first filter out the S&P 500 stocks. So you see here, these are the S&P 500 stocks listed. And right now in this stock screener, by default, it is sorted by market cap. So we're seeing the list right now defaulted by highest market cap. If you click on any of these columns up top, it'll resort it, ascending, descending order, whichever one you click on. But let's keep it right now by market cap. So we see, S&P 500 stocks here. If you do switch here, these tabs, it will change the data. So you can see here, every tab I put on has a different set of data. Let's keep it at the technical level. So here, what we want to see is, well, how many of these stocks right now are away from their 52-week high. So here, see here, percentage from 52-week high. And we want to see the ones that are in bear market down more than 20%, like these. So I could, let me see here. I think I have it actually set here, bear market. So these will be bear market territory. So I already set that in here, but these would be any bear market. So let me just see from the 52-week high. So I'm going over here, price, volume, and technical. I haven't been on this screen for a little while. So I'm going to go price, volume, and technical. I get a different set of filters under this folder. And here is percent from 52-week high. So let's say, below 20%. So these will be now considered bear market territory. So we see about 137 stocks out of the 500 S&P 500 are already in bear market, bear market territory. So the highest one, Amazon, got over 23% from 52-week high. Tesla, NVIDIA, Visa, Disney. So some pretty, big name stocks, right? Netflix is now down 44%. So let me see the 50%, if there are any at the 50%. So these are 50%. So 9 of them are down over 50%. You can see, the ones sticks out, Twitter. This is a biotech stock. This is also, I think, biotech, right? Moderna, Discovery. So 9 stocks so far down, got cut in half from their 52-week high. Let me come back to this 20%. And let's compare that to the QQQ. So this will be stocks that are in the QQQ, NASDAQ 100 in bear market territory. So here we see 49 stocks, right? So there are 49 stocks right now that are considered in bear market. Amazon, Tesla, NVIDIA. So you see them all coming down here. And it just kind of goes to show that, a lot of, even though we were kind of near our 52-week highs a couple of days ago, I think that this list was like similar, didn't grow that much. I was looking at the past, and it did grow, we did come off, but this list was kind of big even prior to this sell-off. So it was a little bit, surprising how high that market was. But this is one way to kind of just get a sense of, the amount of stocks that have not been participating in this bull market, coming up to how far they've declined from their 52-week highs. Let me just do one more in Dow Jones, because these are the biggest ones, Dow Jones. So you could see here, 6 of those stocks, Visa, Disney, what's that, Salesforce, CRM, Salesforce, Intel, Boeing, Dow Chemical, all down over 20%. So really, that's one quick way to kind of just take a look at within, an index, how many are now in bear market territory. Any questions, Will?
No, that's amazing to see. That's for sure.
Yeah. Let me take a look at below. Let me leave this right now. Let's take a look at below their 50-day moving average, right? So that's a big technical. How many are now below their 50-day moving average? And let's take a look at least 10%. So 82 stocks now are at least 10% below their 50-day moving average. So you can see here, this is in the S&P 500. So significant amount. Again, let's take a look at above, right? Let's see if there are any above. So 82 below, 12 above. So these are the above. Looks to me like mostly these are
all the oil and gas.
Oil and gas, XOM, right?
Halliburton.
This one's LVS.
The Las Vegas Sands.
Yeah, so that one's a little bit surprising, because you would think that they would probably, right? You would think like they would get hit with this market, because part of what we're going down is the coronavirus, right? We can't get it under control. But the other ones look like they're all oil and gas to me. Here, let's look at the description. If we want to see the description, go to security info. So here, energy, communication. So a lot of energy stocks.
That Activision's a takeover.
Okay, so that's fine. Right. So that one just got taken over. So that explains that. But you could see here, the ones outperforming, at least the rest of them right now, are in the, looks like, energy space. And that's because inflation, and what's oil at now, like $85, something like that.
Yeah.
So it kind of makes, so that makes sense there. So these are, you guys could play around with it. Just wanted to show some examples of, ways that you could filter out technicals, and using some of these ETF holdings to see which ones are doing better, worse in the distribution. So let me let go of this. If there are no questions on here, I can move on just to see what's coming up on the earnings front.
Yeah, that's great.
Okay. So on the earnings, let's take a look at upcoming earnings. So we are still in earnings season. So I'm up here, earnings, upcoming earnings. And this is the summary page. I'm going to come up to this one for report next 2 weeks. And this is going to give us a list of stocks that are expected to report earnings in the next 2 weeks. We've got an announcement right now. The list goes by the most recent dates, and it goes out further. And there is a default filter that it has to trade at least 1,000 option contracts or more per day. You could change that, but that's the default filter. The reason for it is this particular report is looking at what are the option traders pricing in the expected earnings move. Okay, that's what this report is looking at. And then it's going to compare it to historical statistics. So let's just go over that. We see GE right now. Did that come out with earnings? It says here before market open. So that might have come out. So let's just take a look at Microsoft, for example. So Microsoft is expected to report today after the market close. All right. This is the average daily option volume here. And this is the right now expected earnings move, or the implied move, we call it. And what does that mean? Well, it looks at the option prices and it looks at what is the at the money call, at the money put. And if you buy the call and you buy the put, you need the stock to move by a big enough percentage to cover the cost of both those options. Okay, so what you're doing is really playing the over under, right? If you're buying both options, then you're saying that the move is going to be more or above the cost of it. If you're selling it, you're saying that the move is going to be lower than the cost of it. So it's like an over under on the move, not direction, but the move, right? So right now, what this is telling us is that the implied move or the straddle is pricing in 6.3%. So it has to move 6.3% up or down, for that to break even. From the buy side, you want it to move more, from the sell side, less. So let's then compare to our historical stats to see how that measures up. So first, let's take a look at what is usually the over-under prior to earnings, right? What are the markets usually, pricing that premium at prior to earnings? So if we look at the last four quarters, on average, the implied move, the cost of that straddle was 3.4%. So you could see right now pricing in a much higher move. And this could be also because we're seeing just general market volatility, right? So I don't think it's surprising given how the market's been moving. So we got a couple things here that could move the stock, really the earnings, but we're like in the midst of a very volatile market, right? Like the market is moving around, much greater than usual. So maybe that's not that surprising. You have to kind of take that into account. But let's still, compare, but you could see how much over, right? So you got like almost another 3% built in there. What about last 12 quarters? So prior to earnings, on average, that the markets were pricing in a 3.8%, let's call it over under, right? The implied move, it's got to move more than that. So that's looking at how the options were priced. What about what the stock actually did, right? So what actually happened after earnings? So let's take a look at that as well, because ultimately that will be, deciding factor if this thing is going to move, enough or not. So in the last four quarters, on average, the realized move on the day was 1.8%. Up or down doesn't matter. On just the move itself, on average, it was 1.8%. The high move in the last four quarters was 4.2%. On the day, the low move 0.1. If we expanded that to the last 12 quarters. In the last 12 quarters, the average move was a little bit higher, 2.3%, with a high move of 5%, and the low move almost unchanged. So here you kind of have your stats in front of you to help guide you. Again, I think right now a lot of these though will have an extra pump in there because of the volatility, right? All stocks right now are kind of moving in tandem, up and down. Because when we get an increase in volatility, they kind of go to one beta. So you'd want to, pay attention to that, especially I think we could take a look at SPY implied vol rank, but that's something to keep in mind. So let's just take a look at SPY just to confirm. So you could see here's the SPY. And over here, I could see the 30-day IV, 24.8. That's in a 99 percentile rank. What does that mean? Well, if we look back the last 252 trading days, right, which is like a year's worth of trading days, if we look back 252 trading days and compared this implied volatility to those days, 99% of them were lower. So taking end of day implied vol, last 252 days, and saying, well, how does this compare? 99% of them were lower than today. Okay, let's just take a look. Here's the chart, implied volatility. That's what kind of looks like. So we got up to here, right? So you can see here last year. What does this mean? I'll go over this. We don't have too much time. Maybe if you get a question, let me know. But kind of what does that mean though? In when we see implied vol and we say, okay, well, it's lower 99% of the time, but in numbers though, how do it translate into like a quantifiable number, right? Because it's just right now it's just a number, right? 30 days, 24.8. What does that mean? So one way to do it is actually convert it to what is the cost of that straddle? Like if I bought a 30-day straddle, right? How much would it cost me? And how does that compare to a historical cost? Like what am I expecting the stock to move in the next 30 days if I'm buying this straddle? So we need to convert it to the number to an actual cost, right? So we, is this a $40 straddle? Is it a $10 straddle? Do I need the stock to move 2%, 3%, 5%? And that is a different type of benchmark that we have to take and convert it, that you have this quantifiable, measurable, number that you could reference. So I'm going to go here, options, and under strategy benchmarks. That's what these benchmarks are for, so you could look at these different types of strategies and convert them to a number. So let's take a look at the straddle. So here's the straddle, SPY straddle for 30 days. You have it for 60 days, 90 days, and so forth. So what is the straddle here right now? Next 30 days, it's pricing in a 5.6% move. Okay, so how does that compare to historical average? 3.3%. So you could see 2.3% over historically where this straddle was priced. What does 5.6% mean? For every $100 of SPY, in notional, the straddle will cost you $5.60. Right, that's what it means. So because you convert it into notional, or take 100 shares, 5.6% times notional, that's what it costs you. In other words, you buy that straddle for 30 days, it's got to move more than 5.6% to cover the cost of that strat, right? Or you sell it, it's got to move less than that next 30 days. So that's kind of how to look at the benchmarks. Will, if you're saying something, you're mute. I can't.
Sorry about that. I was just thinking in my head, it seems expensive. I mean, I realize we've had some amazing volatility the last week, so obviously it's priced that way. But you do that over the course of a year. That's you're spending.
It seems expensive, but just to put in perspective, let's just take a look at what it did yesterday alone, right? Just like, what did the stock do yesterday? And let's just see here. I'm going to come here to the historical data. So this is yesterday's, low. So, right, we opened at 432, went down to 420, and then closed at 439. So you help me with, so just from the low to the close of the day, right? And this is in one day, this is a 30-day straddle. But if we just took yesterday's rally from the low to the end of the day, that's, what is that, like $19, right? $19. So that alone is like over 4% move intraday. Is my math correct? Like that's an over 4% move from within one day from the low to the close. So that's how much they rallied this stock. And you could see here, even from the open, from the opening price, which I think we opened significantly lower, but just from the open to the low of the day, that's also like $12 almost. So we're getting pretty significant, volatility even intraday. And one thing with options that you want to look for from the buy side is not so much the intraday volatility, it's those gaps. The gaps, remember, if the volatility is coming from gaps, options are more valuable, right? Because what happens is, the gaps, you don't have a chance to reduce your positions or hedge your positions or get out. It just goes from one price to the next. And it's like, boom. So when it does that, those gap moves make options much more valuable than intraday volatility. So when you're looking at the volatility, here, let's just take a look real quickly. Stock volatility, right? So this is the stock volatility, and we could measure it here from open to close, right? So that's the gap. And this is from close to open. So you could see here that yellow line, right, is that's the close to the open is the gap move, right? So that's the one you want to see it. When that's starting to tick up a lot, that makes those options much more valuable because, again, options are kind of instruments with the assumption that you could hedge your deltas. But when the stock moves violently from one price to a different price without that chance, it makes that option much more valuable. So even though 5.6% may seem like a lie, just based on, what we saw yesterday, and we're seeing, right now we're down 1.5%. You got to take all those into account. We're right at 9:30, Will, so it looks like no questions.
Yeah, that was great information. We did have one question from Trevor. I didn't want to interrupt your great analysis and volatility, but he was asking about seeing an unusual option volume if the stocks have earnings, if any stocks with earnings. Maybe that's something we can look at tomorrow. He was asking. Why don't we wait? Why don't we hold off till tomorrow to do that? But it was okay. He wants to see if any stocks with earnings are having unusual option volume. So we'll show that tomorrow. Leave a little something to look forward to tomorrow. Dima, great job, my friend.
Great. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you tomorrow.
one last thing, we have a webinar with Raj today at 6 p.m. So Raj is going to be walking through the way he looks at the Chameleon and doing different things and things he's doing on Discord right now. So that should be very good. Thanks, Dima. Thanks, Chameleons. Have a great day, everyone. Trade in peace.
Byron.